40inbox.com here, where we help you master your money. So we're going to be reacting to an article called 15 Ways to Invest $10,000. Now, this article is written by someone called Jeff Rose, who is a CFP, which I believe is a certified financial planner. But let's get into this article. So do you remember the first time you wrote a check for $100? The first $100 check I wrote was for my cell phone way back in 1997. Whoa, that brings back memories. And at that point, it hadn't even occurred to me to invest the $100. I was just happy to have my cell phone. So what about your first $100 check or your first $1,000 check? I bet you weren't wondering how to invest $1,000 then, were you? Even better, your first $10,000 check. The first time I wrote a check for $10,000 was to pay off my student loan debt. That was by far the best check I ever wrote. For me, the choice was clear, but where to put an extra $10,000 isn't always an easy decision. I'm here to help. By far the quickest and easiest way to set up a diversified portfolio of stocks with $10,000 is through Robinhood, which is our top investing pick. Now here's the thing, right? Like I agree, like one of the easiest ways to actually just set up an account is actually with like Robinhood, right? Like it's actually like surprisingly simple. Okay, so so here's the top 15 best ways to invest $10,000 in 2021, but let's skip the list and just get right into the story. So number one, invest in a high yield savings account or CDs. So if you want to be completely safe, you can invest the money in high yielding CDs or a high interest savings account. These days, the best rates are coming from online banks. For example, CIT Bank offers its savings builder account, and you can open an account with a minimum of $100 and secure an APY of up to 0.95%. Online banks have all the advantages of traditional banks, including a debit card and ATM access. Your deposits are covered by FDIC insurance up to $250,000, and you have all the benefits of dealing with a reputable bank because that's exactly what these online banks are. Now, here's the thing, right? Like, having your money in a high yield savings account or CD doesn't really change much of anything, right? Like if you're really trying to like invest, you got to do something completely different than like a high yield savings account or CD, right? Like really the only money that you should really have in like your savings accounts is like basically your emergency fund, right? Because you should have a whole different type of account for your everyday expenses, like separate from your actual money in a savings account. And the thing is, 1% is not going to beat inflation. So that's something that you also got to think about too. So number two, autopilot investing. So if you want to put your money into a virtual autopilot situation, a robo-advisor may be exactly what you're looking for. M1 Finance. M1 Finance is a brokerage where you can invest in a stock and ETFs for no fees. This gives them the largest number of no-fee stocks and ETFs of any brokerage online. What puts them in the robo-advisor category is that they have pre-made and managed portfolios where you can invest your money still with no fees automatically. You can also create your own auto investments, making M1 Finance one of the more versatile ways to auto invest. Next, there's Betterment. It's an online investment management platform often referred to as a robo-advisor because everything is handled automatically for you, and investment selection, asset allocation, rebalancing, tax loss harvesting, it's all done for you and have very reasonable fees. The annual management fees are just 0.35% or $35 of an account of up to $10,000, and it drops to 0.25% when you exceed $10,000, all the way down to 0.15% when you reach $100,000. 10K won't buy you much in the way of diversification with individual stocks, but will be plenty with Betterment. Number three, peer-to-peer lending. So if you prefer fixed income investments to equities, peer-to-peer lending offers an opportunity to earn interest rates that are well above average. What these sites do is bring lenders, investors together with borrowers to create an open lending environment that cuts out the banks and their high rates and restrictions. This results in what is often more flexible loan terms for borrowers and much higher interest rates for investors than what they can get on even long-term certificates of deposit. Now, there are various peer-to-peer lending sites on the web already, and more seem to be coming up all the time. But the best established of the lot is Lending Club, and some people who invest in the platform are reporting double-digit interest rate returns. Now, there is some risk to investing on peer-to-peer sites, but if your interest rates are high enough, you have the ability to cover those risks, and you still come out well ahead of more traditional fixed income investments. I spoke with Lending Club, and the recommendation was to start off with at least a $2,500 investment. And since you can invest as little as $25 in a single loan, this gives you the ability to diversify into 100 different loans and bring your risk level down greatly. Get a full explanation of how to use the peer-to-peer investing. Okay, so he's doing like the Lending Club reviews. Now, here's the thing, right? From what I can just start from like reading from this, whole like post, I like this person's content, but it is like stockpiled with like affiliate marketing kind of stuff, which there's nothing wrong with that, right? So what this means is that like if you're watching this right on the YouTube channel, all these like blue links, right, are basically affiliate links to the actual product, right? And again, there's nothing wrong with that. He makes a disclaimer about it as well. But at the same time, like it is packed with it, right? So that's the only thing I don't necessarily like. I mean, I'd prefer like someone to write something that's like, if you're going to do something like affiliate based, that you make just like one thing affiliate based and then move on. But I understand what he's doing. It's very busy. So number 4, real estate. Real estate is an excellent investment, no doubt about it, but $10,000 isn't enough to make a down payment on the purchase of an investment property these days, unless it's in a very rundown area. Again, another affiliate thing. Don't really like that. So one way to do it through real estate investment trust is REITs. These investments have several advantages over owning property outright, including high liquidity. You can buy and sell shares in REITs much the same way you trade stocks. Diversification. REITs represent a portfolio of commercial properties or mortgages rather than in a single piece of property or mortgage. High income. The dividends paid by REITs are usually well above the dividend yields in stocks and in a different stratosphere compared to certificates of deposit. Tax advantages. REITs don't sell properties nearly as frequently as mutual funds sell stocks. The net result is much lower capital gains. You also don't have to get your hands dirty. So anyone who has ever owned an investment property can appreciate this advantage. Now, there are plenty of REITs to choose from out there, and then the internet has made it extremely simple to get started on REITs. Again, another affiliate thing for Fundrise. Number 5, do yourself a stock market. Most people seem to prefer to invest their money in mutual funds, particularly when it's a relatively small amount of money. But if you've been showing real ability to make money trading stocks on your own, this might be an opportunity to take that up to the next level. Now, this is the thing I don't agree with, because here's the thing. Pretty much 99% of people are not going to be good at picking individual stocks, right? Because you just don't have the time, right? Most people just do not have the time to pick individual stocks. So for the majority of people, one of the best and simplest ways for them to get started with investing is with like an index fund or like an S&P 500 index fund. Because here's the thing, right? Like you're just not going to have the time to individually pick stocks and do the proper research to not lose your shirt. Because there's a lot of times where people put like $100,000 into an individual stock and end up losing everything. So number 6, build your own motif. So speaking of mutual funds, if you're looking for a different kind of fund, like really different, check out an investment platform called Motif. See, again, this is the thing I don't really like, right? Like literally every single thing that he's put inside his thing is an affiliate product. Again, I understand it. I understand why he's doing it. He's probably making a lot of money from doing that. He's probably making, I don't know, maybe $10,000 to $20,000 minimum from his affiliate marketing, from his site and all that content and all that kind of stuff. But still, at the same time, like it's non-stop, man. Come on. Okay, so Coaching programs is the next one, number 7. When we think of investing, we generally think of putting money into assets with the hope of getting a return on investment. But the best investment that you can make are the kinds that you make in yourself. I agree. One of the ways to do this is to put some of your money into coaching programs. This is mainly for if you want to learn something and you want to learn specifically from someone specific, there's nothing wrong with that. Number 8, getting a designation. So this is another example of investing in yourself. So whatever your career is, you should be looking to add any necessary designations for your field. They can raise your visibility, your credibility, and the willingness of customers and clients to do business with you. So he is a CFP. So yeah. So he is a certified financial planner. This guy is. So I acquired my certification as a CFP, a certified financial planner, and it enabled me to launch an entirely new and rewarding career. You can find out what certification will represent the top of your field and invest some money getting a designation for yourself. Interesting. So number 9, going back to school. So if you feel that your career is stagnating, and a lot of people do these days, going back to school could be the best investment of time and money that you ever make. $10,000 won't get you a graduate degree at a name university, but it could cover much or even most of the cost of getting an associate's degree at your local community college. This money could present the perfect opportunity to retool into a new career, and one that is a lot more relevant in today's economy. According to the National Association of Colleges and Employers 2019 Job Outlook Survey, U.S. employers plan to hire over 16% more class of 2019 grads than they did 2018 grads. So basically, it just suggests that the most promising hiring outlook for new college grads in over 10 years. Number 10, online courses. So if the idea of returning to school to get a new degree doesn't appeal to you, or if you are at a point in your life where it's simply too inconvenient, you should look into taking online courses or classes. There are all kinds of courses available that can help you move into a new career or business or just improve your life, right? Number 11, starting your own business. So this is yet another example of investing in yourself. By starting your own business, you put yourself in a position to take maximum advantage of your knowledge, skills, and abilities. That increases the likelihood of your earning a high income. Leaving my old brokerage firm and starting my own financial planning practice ranks as one of the best business decisions I've made. It definitely has its scary moments, but the rewards have been amazing. Thanks to the internet, it's very possible to start your own business with just a few $1,000s. Heck, I started this blog for less than $500. So choose the business that you want to go into, study how you can market the business through the internet, then come up with a business plan. $10,000 should be more than enough to get started with. In fact, you better not start out with more than a $5,000 investment for an online business. There are plenty of ways to start a home-based business that require very little upfront capital. One more point in starting a business: when you put money into a given investment, you're doing so with the idea that it will be worth money in the future. But when you have a business, it can provide you with an income for the rest of your life. That's more valuable than just about any other investment that you can make. Number 12, starting a blog. Now this can be a winning idea on so many levels, and you probably won't need anywhere near $10,000 to make it happen. Choose a broad topic area: careers, technology, finance, investments, real estate, or just about anything you're interested in, and have at least above average knowledge, and build a blog around it. That's what I did with my blog. As a financial planner, it's been easy for me to tackle personal finance and financial planning related articles on an ongoing basis. My wife had a different beginning with her blog. It started as a way to document our growing family, but after she realized she could make extra money blogging, she started focusing on things that she was passionate about: motherhood, fashion, home decor, and our pending adoption. I'm still in amazement at how often her home tour page has been shared on Pinterest over 1 million times. The idea to create a website with valuable content that will draw visitors to it, and as it grows, you will have opportunities to monetize it through advertising, affiliate arrangements, essentially selling other people's products, or as a platform to sell your own products and services from. This could be a way of building a side business rather than taking the plunge into a full-time venture. You can do it as a sideline until you're ready to ramp it up to full-time, and you can make it move at whatever pace is comfortable for you. But once you get going, a blog can be an incredible source of new and exciting opportunities as well as income. Number 13, launching a podcast. Podcasts are basically blog articles set to audio. But they have the advantage that they can also be placed on other websites for greater exposure. And just as is the case with a blog, there are ways that you can monetize podcasts. The simplest way is to do a series of podcasts and solicit listener donations. This can work beautifully if you have a loyal following, and you can also get advertising sponsors in much the same way that you would for a blog. Who would pay for a mention in your podcast or on the site where the podcast appears? John Lee Dumas, from the top-rated podcast on iTunes, has made a name for himself with his podcast, Entrepreneur on Fire. John launched his podcast in 2012 and since then has made almost $3 million in revenue. The best part is that he publishes his super highly detailed income reports monthly for those that want to chart his progress. In the beginning, much of his revenue was from advertisers, and since then, he has offered various courses and products for those interested in monetizing their products. That man is on fire. So number 14, resell products on Amazon FBA. If you have a talent for finding bargains but have never had the inclination to sell some of those bargains for profit, Amazon FBA is probably the most hassle-free way to do it. FBA stands for Fulfillment by Amazon, and that's exactly what they offer. You deliver the items you want to sell to Amazon and then market them on the site. Once they have been sold, in the usual way that sales take place on Amazon, the company will handle the shipping for you and is one of the easiest ways to run an online business. Number 15, pay off debt. This is the most risk-free way to invest $10,000 or any amount of money, and it provides a virtually guaranteed rate of return. Now, this is the thing I agree, right? And honestly, this is the first thing you should actually do is pay off your debt. So let's say that you have a credit card with an outstanding balance of $10,000 that has an annual interest rate charge of 19.99%. By paying off the credit card, you will not only get rid of the debt permanently, but you will also lock in what is effectively a 19.99% return on your money. No, it won't mean that you'll be collecting a 19.99% rate of interest as a cash income on your money, but it will mean that you're no longer paying it, which is virtually the same thing. Here's another plus. The 19.99% that you will earn on your money by not having to pay it out every year is income that you will not have to pay any tax on. If you're receiving 19.99% on $10,000 directly, a large chunk of the income would have to go to pay income taxes every year. So the bottom line, with inflation, $10,000 may not seem like a lot of money these days, but it's plenty if you want to get into some interesting and imaginative investments. You can use them as an opportunity to grow your nest egg into something much, much larger. It's even enough for you to get into 3 or 4 of these investment ideas, which will give you an opportunity to really grow your money. And here's the thing, right? I agree with pretty much everything that this person, Jeff Rose, ended up doing, right, on his blog, right? Like, I agree with pretty much everything that he said in this article. That being said, even though he did make the disclaimer of like how he makes his money with the affiliates and all that kind of stuff, right? He made it clear that that's how he's going to make some extra money from this. I still don't necessarily like just how many affiliate links were actually inside this article. Like, it was like a very busy kind of situation. Now, here's the thing. If it was something like where like he had like a post and then like at the very end made it very clear like click here for these products, I'd be much more like okay with it. I would have felt like less annoyed by it. But either way, I still like this article. I agree with basically everything he says. And this is the thing, right? Like, the best investment of $10,000 is to pay off your debt. First and foremost, to pay off your debt. That is the best investment for anyone of any income level, of any financial situation could possibly be, is use this $10,000 to pay off your debt, whatever that debt is. Because you do not want debt dragging you down in life. By the way, if you need help with mastering your money, go check out 40inbox.com, where you can learn how to get out of debt, create an emergency fund, and start investing in a very simple manner so that you can start living a life that you want to live with more freedom. And we'll see you in future episodes. If you like this sort of thing, hit the like button.